Good morning, everyone. I will start the session in another 10 to 15 seconds. Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team. Before we go into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Here is a Nifty's daily chart taken from our website. As you can see, Nifty has been trading around new all-time highs, which is a very positive sign from the investing perspective. Now, if you look at last 2 months of trading, Nifty has been trading or hovering around its 21 DMA, which is a green line here, and most of the times it reclaimed its 21 DMA, and currently it is trading clearly above that level as well. On the downside, this 21 DMA is going to be a very crucial level for the index, and from there, 50 DMA is not far from there. So 50 DMA is also going to be a very good level of support for the index. But if these two levels are breached on the lower side, definitely we might see some profit booking and followed by selling pressure in the market. But looking at the overall market scenario from the economic, microeconomic perspective as well, it is looking good. We may not see Nifty breaching 50 DMA in the going period for a period of 1 or 2 weeks. And we expect the Nifty to trade in a range bound session from here or around 500 point range from here. And if there is any major pointers which are moving the market on the upside, we might see Nifty making or continue to scale new highs. On the O'Neill's perspective, we are in a confirmed uptrend with a distribution day count of 2. We have seen a couple of distribution days expiring as well in the previous weeks. So going forward, if there are Nifty succumbs or falls more than 0.2% or more on volume here than the previous session, we might see yeah, if there is any further accumulation of distribution days to 3 or 4 and Nifty breaching 21 DMA and 50 DMA, we might change the market status to uptrend under pressure. Until then, we continue to stay in the confirmed uptrend phase. Coming to the model portfolio, we have adequate number of stocks in the portfolio, and we are closely monitoring the existing stocks as well. If there is any stock moving sideways or falling on higher volumes, reaching key moving averages, we will exit those stocks and we look for fresh breakouts to add it to model portfolio. Coming to next part of the presentation, that is the key news and stocks which will be under radar in this trading session. First is Rail Vikas Nigam, that is RVNL, has received multiple orders. One such order is around 1,300 crores from Himachal Pradesh State Electricity Board and 250 crores of project from Madhya Pradesh Kurukshetra Vidyut Vitaran Company. And it's a joint venture with URC has also received an award worth around 543 crores of rupees. So this is related to Indore Metro Rail project. So overall, RVNL is looking good on the order book trend. So definitely a positive sign. Macrotech developers have raised nearly 3,300 crores of rupees by through qualified institutional placement, that is QIP. In the last 36 months, the company has raised over 13,000 crores of rupees. Torrent Power received an award from Maharashtra State Electricity Distribution Company for setting up a 306 megawatt solar project in Nasik. And this overall project is estimated to cost around 1,500 crores of rupees. And the Torrent Power will distribute the power at a tariff of 3.1 rupees per kilowatt hour. HG Infra has declared a L1 bidder from NHAI, that is National Highways Authorities of India. Two projects it has received. One is around 610 crores of rupees, and another one is around 862 crores of rupees in Andhra Pradesh. In the weekend, that is on the US market, that on the Friday closing was on the negative side. You can see Dow Jones, S&P, and Nasdaq closed in the negative territories. Nasdaq has seen major selling with a decline of 1.2%. Asian markets are also trading in the negative territory as we speak. You can see Shanghai is trading with a minimal decline of 0.2%, whereas Nikkei is trading with a deep decline of 2.5%. On the global front, the Qs are on the negative side, but GIFT Nifty is looking very good. So there are mixed Qs from there is weak Qs from the global, and GIFT Nifty is indicating a positive opening. So there is a mixed Qs from overnight. So we might see Nifty trading or opening around previous closing, and we might see some range bound session as we talked about previously. The chart out for the chart of the day, we picked Zen Technologies. The stock has been forming a very long cup base pattern, and it is trading in the ideal buy range. You can see it is just at 4% from the pivot, so 0 to 5% is ideal buy range. And within the base formation, it has been very ideal. You can see the volumes have dried up completely during the whole period of base formation. That is a very strong sign. Number of pointers are looking very good. Most of the pointers are looking good. EPS is at 73, is very good. Technical ratings are also looking very good. Price strength of 87, ABD rating of B. Number of institutional funds which are invested in the company has been improving consistently for the last 4 quarters. Again, a positive sign. And the chart wise also it is looking good. If you are looking for fresh additions, if you have capital to invest into the market, you can look out for stocks like these to start investing. Thanks for joining today's people. Have a good trading session.